We entered the year slightly more optimistic than during the previous MPR release in October 2025. The global economy had adapted and had adapted well to the tariff shock, and inflation was easing, even only slowly. On the local front, we ushered in a significant monetary policy reform with the announcement of a 3% target, which helped to guide inflation expectations lower. However, today, we are in the midst of yet another shock with the outbreak of conflict in the Middle East. Prices for commodities like oil, gas, and fertilizer have moved sharply higher, and uncertainty has again risen, heightening both growth and inflation risks. While it is still early to predict with much confidence the full implications of this shock, central banks have sharpened their focus on inflation. South Africa is no exception. For much of the past 6 months, inflation remained well contained and in line with our 3% target, whilst the economy continued to expand, albeit modestly. The near-term inflation outlook has now deteriorated, and the risks of second-round effects weigh heavily on our economy. In the face of these risks, the Monetary Policy Committee remains focused on the South African Reserve Bank's primary mandate of price stability and will continue to ensure inflation expectations are well anchored. We are committed to achieving our 3% target. We have learned our lesson from the previous shock of 2002, where the target was lowered, and when the shock came, we decided to go back to the old target. It was a costly macroeconomic lesson.